everybody, and welcome to the webinar today. Today, of course, is November 17th, 2016. Now, again, next Thursday here, of course, is Thanksgiving in the States, so we're not going to have a webinar. So this should be the last one until really the end of the month. But what I want to do today is go through the presentation, which, of course, you should have already. It'll give you all the lines, index levels, and so on and so forth. Go over a particular setup, and then we'll take a look at some live charts, because we had a couple of earnings plays today, I guess, that popped pretty well. But let's start with the S&P 500. And let me just start by saying, we'll look at the daily chart after I finish the webinar here. But, you know, this has been really an incredible run, to say the least. The market, of course, had been selling off significantly pre-election, okay? And then, of course, you know, as typical, I should say, with the markets, you know, all the pundits and gurus were out there saying, well, if Trump gets elected, you know, this market's going to go to hell in a handbasket. And just the opposite happened, very similar to what happened with Brexit. Now, quite frankly, I didn't expect as strong a rally as we got. And the main reason, as we did after Brexit, only because the Chaikin money flow was negative on the daily chart on the S&P 500, as opposed to Brexit. And we'll look at that in a little bit. But you'll see that the money flow had been positive on the daily chart after the Brexit vote. So, you know, we had that really strong snapback rally then, probably had a stronger snapback rally after the election last week here in the States. But what's kind of interesting about this is I think we had 8 or 9 consecutive down days, bearish closes, I should say, going into the election. And, you know, that's usually a recipe for a reversal. All right. So, you know, the conditions were already in place for a reversal to occur. The question is, you know, what would the magnitude be of that reversal? A couple of things I want to point out here on this 60-minute chart. Okay. Okay. These were the bearish down closes. Okay, and as I said, I think there were 8 or 9. I think it was actually 9 bearish closes. As you can see, we were under the lower band. And what's kind of interesting about this is the ADX line peaked at almost 60. And, you know, here's a little tip with this ADX. When that ADX line gets over the 40 level, it's usually signifying exhaustion. And in this particular case, it was actually at 60, which is an extremely high reading. And voila, what happens, the market reversed and proceeded to scream up. Now, you know, we know our objective levels on the way up. I mean, we knew 21.25 was a major line. We got above it. You can see how it held the support, continued up to the confirming line. I took out the confirming line. Then, of course, hit the 21.72 level. Now, right now, the objective should be to 21.87.5. The next level up is this 22.03 line. All right, that would be the confirming line up to the next level. But what's very interesting now is this level is the level that the market failed at. All right, we had 2 attacks at it, and both times it failed. So right now, to me, we're kind of at a precipice. A precipice in that, you know, one or two things obviously is going to occur. We're going to break through 21.87, or the market should be repelled here. So let me go back to that. So it's key to know this line. And again, you know, market is memory. I mean, you know, we've been there twice before it's been repelled. Now, it doesn't mean we can't go up, pull back a little bit, and then make the run. But 21.78, what's been kind of interesting here is that the 21 I'll call it the 2172 level, has been acting as resistance. Okay, and that's the downside confirming line down to 21 and a quarter. And we got above it, and again, today we're back above it. And I'm looking at the market now live, and we're within a point of the 2187 level. So we're almost there. We're almost there. Likewise, here's the VIX. The VIX, of course, screamed up before the election. So again, this is the fear index. Completely climbed. Where did it climb from? Well, as usual, right above our 1250 line. Ran up to over 2188, got above the upper band, and proceeded to sell off. Now, here's the thing I want to point out here with the VIX. And honestly, I was kind of looking for a move up to the upper band. So the VIX really faked me out too, quite frankly. I was anticipating we could probably be repelled up around the upper band, and that didn't happen, which would have been nice because to me that would have set up a better long in the markets, and it would have set up an opportunity to really short the VIX. But naturally, it caught us off guard, stalled just above the 2188 level. Now, the reason I'm showing this daily chart is this. When the higher time frames in an uptrend and the lower time frame gets above the upper band, that's usually a very good opportunity to short. And the short, had you shorted the VIX here above the upper band on the 60, the objective should have been back to the mid band. And you can see here what happened. It kind of bounced along, limped along the mid band for a number of days until it finally broke down. All right. Here's the Qs. The Qs had the very similar pattern to the S&P. Okay, held above the support line, got underneath the lower level. As you can see down here, the ADX line peaked out around 60, exhibiting tremendous exhaustion, if you will, and then the market proceeded to move up. We had the nice gap up above the lower band, took out 115.63, headed up. Now, unlike the S&P, you can see that it stalled right at the mid-band. Okay, so again, the objective should have been back to the mid-band. It hit the mid-band, and it sold off and came back for the retest of the lower band. Now, as you can see, it had two retests of the lower band. All right, and now it's back above. It was actually closed the other day just under 116.22. Confirming line is 116.41. So it would still need two closes above that. And then here's the TLT. Now, the TLT, to me, is at a very significant juncture, okay? Now, of course, with this chart, the 60-minute chart, you can see that it's oversold, all right? We know it's oversold vis-a-vis the fact that it was trading underneath the extreme lower Bollinger Band, which exhibits a very strong oversold condition. Just like the S&P 500, if we look down here, the ADX peaked out at over 60. But now we're sitting right at a very key level, which is the 121.88 level. And if you look, the other day it closed at 121.99. So it actually closed. And by the way, these charts are actually from Tuesday. I pulled them off Tuesday thinking the webinar was yesterday, and so I didn't update them yesterday. So we're actually 2 days behind. We're actually 1 day behind. But regardless, it's not going to be all that significant because we know the key level was 121.88, right? Tuesday it closed just above that, and actually yesterday it did close above it again. So what we're looking for with the TLT is this, and this is the big concern right now. If we had two closes under 121.88, I'd be looking for a move down to the 113, possibly 116 area. So it'd be a pretty strong move to a tremendously oversold condition. However, you know, well, sorry about that. However, as you can see here, we've got a short-term oversold condition. So the anticipation is we'll get a bounce here, which appears to be happening. But you know, this is kind of interesting too. I pulled off the weekly chart, okay, and a couple of very significant things were occurring here on the TLT. There's the 121.88 level, okay. So you can see that we're right at that 121.88 level, all right. And as I said on the 60-minute chart, if we close two closes under 121.88, I expect to move down to around 113 to 116. And what's really interesting about this is that the mid-band over here happens to be 113.40. So the supposition here would be that if it failed at 121.88, it's probably going to run right back down to the mid-band. Now, the other critical element here of this weekly chart is that the TLT did get above the upper band. So at some point, I do expect another run up. The question is, where does it find support? That's the million-dollar question right now. The other significant thing I wanted to point out is this. I mean, if you look up here, this money flow has been positive, you know, really since the middle of 2015 to just recently. And it's been positive the whole time. And now it finally went negative. So, you know, some unusual things are happening that, quite frankly, are, you know, I would say normal. Okay, here's the GLD. GLD crossed into a downtrend on the 60, came down and stopped the other day right at the 115.63 line and started to move up. Okay, now I don't expect the GLD to go much further than this 121.88 level. It may stall at 118. But, you know, if you look at this chart, what's really interesting about this chart here is this. Here's the 125 level, which I had said should be resistance. It's dropped 1, 2, 3 levels. And very simply, when the trend is down, you typically expect a 3-level move, which is what happened. The counter trend moves really should not go more than 2 levels. And that's why I say it probably won't violate 121.88. If it does, we know that something is changing in the GLD. And here's the XLE. All right, the XLE finally hit the 71.88 level. Okay. Next level up is 72.66. So take a look at something here. Took a while, but it finally hit it because you can see we peaked here, 60 cents underneath it, came back down, retested 68.75, and from there it ran up and did hit the 71.88. So within 2 cents, and I believe today we're above the 71.88. So the other critical thing regarding the XLE is that we are getting close to moving into an uptrend on the 60-minute chart. The 30 is already in an uptrend, but the 60 has not rolled over into an uptrend. Here's the FXY. The FXY, this was kind of interesting. Because I was looking at this market, and the FXY is a perfect downtrend. You can see here's the mid-band. There's the 200. It came back and stopped right at the mid-band, which also happens to be right at that resistance line. And from there, it proceeded to just drop pretty significantly. So I wanted to show that chart because that's a really good short pattern there. And then here's Apple. You know, like the major markets, I mean, Apple was oversold, got underneath the lower band. Kind of interesting because here's the first time it popped underneath the lower band. Here's the bearish cross. Here's where it got oversold. So there's a short down to, what's that level there? Erase that. That was 111, 112 roughly, all the way down to 104. So it dropped $8 off that setup. So we had 1, 2, 3 spikes underneath the lower band, and now it's been inching back up off that oversold condition. And then here's the daily chart. Now, again, this is what's interesting about Apple. Apple did cross into an uptrend. Okay, as you can see from the daily chart, it was oversold. Now, I'd like to see Apple come down and test that 103 level again, and I think Apple would be a really good long. Oh yeah, you know what? I did get this email from a member, and they asked if I could just sum up some essential key patterns in 2 or 3 short key statements that gave very promising clues to the best signs that warn or indicate coming direction. And I have to tell you, I thought that was just a great question, okay? So what I had planned to do is this. Over the course of the next few webinars, what I want to do is kind of go through some of these patterns, what I deem to be the better patterns, and or I should say the high probability patterns, because to me the real key to this is, you know, basically isolating the higher probability setups, and then when the higher probability setups show up, okay, then you take the trades, and that's basically it. I mean, that's all you can do as a trader, okay? And then, you know, obviously we want to hope that the market complies, right? And, you know, continues in our direction. So what I want to do is go through, excuse me, you know, one of these setups today. So again, I'm going to answer all of this by sharing what I deem to be some high probability setups. Now again, the first setup is the price under the upper extreme Bollinger Band. Now, a violation of the upper band, to me, shows extreme strength, and we usually expect a retest. The exception to this is if the higher time frame is in a downtrend. If that is the situation, then shorting above the upper band on the lower time frame is worth the risk. Not dissimilar to what we just saw with the VIX, right? Not dissimilar to that at all. Okay, so having said that, let's look at a couple of these charts. Now, this is a daily chart of computer sciences. You can see it spiked up well above the upper band, okay? And again, I'm going to assume that this was probably some sort of an earnings event back in May of last year. And you can see how it just kind of traded sideways for a couple of months. Finally got oversold in August. And then what happened? It continued up after that oversold condition. Here's another stock that breached the upper band, L3 Communications. You know, actually broke it, continued to run above it, and then here's the little failure right at the upper band. Again, kind of traded sideways until it sold off, and then here's an oversold condition, here's an oversold condition. So this little move up here was a couple of points, and then now we've had a more significant move as of recently. Here's a lower price stock, ran above the upper band, hit it again, just breached it slightly, came back down, oversold once, twice, and again, resumed, or I should say, made another retest up. And, you know, when I say a retest, here it's taken out that prior high. If you look at, I'll go back to this. All right. The high here on this day was 154, so it did take out the prior high. And then here was CLF, okay, ran above the upper band, pulled back, ultimately started to make a run back up. And then here's the bad boy that I thought, I'm remiss to say I missed this trade, because this to me was a great setup. Again, took out the upper band, pulled back, and now it's almost back to the upper band again. All right, so let's look at some other stocks. Now here was IBM. Somebody had asked me about IBM. That's why I'm going to show this. But this is kind of an interesting setup, okay? IBM, as you can see here on the weeklies, in a downtrend. Came down, breached the lower band on the weekly, proceeded to reverse, and voila, came right back to the mid-band. So what's kind of interesting about IBM right now is this. It's had 1, 2, 3 retests now with the mid-band on the weekly chart. And let's get that price level. That level's 162.50, call it. So you can see on the daily chart where it bounced off the mid-band. So we had 1, 2, here's the third shot right now. Here's the 60-minute chart. 60-minute went into an uptrend, okay, breached the upper band just below that 162.5 level, pulled back, and then here's the 30-minute chart. Again, you can see where 30-minute crossed up into an uptrend beginning in November, breached the upper band, and has pulled back to within the bands. Now, to me, the price objective should be back to the mid-band, so we'll see if that hits. And here's another stock that somebody asked me about, CMG. Kind of interesting with CMG because the CMG on the weekly just crossed into a downtrend, okay? And, it's kind of bounced up a little bit as of late. You can see here on the daily where it's bounced up, was oversold, okay? Nice doji, bullish engulfment, then moved up. By the way, the objective here would have been to fill the gap. You can see that it more than filled the gap. Now, the issue with CMG is this. Can the daily chart cross into an uptrend? You can see how the EMAs here, I shouldn't say EMAs, it's the 200 EMA and the 253 simple, are getting very close to crossing up. And then here's the 60-minute chart. Okay, so again, going into the election, well underneath the lower band, okay, recovered from the lower band, objective to mid-band. Now it happened that it took out the mid-band, and now it's coming back to retest the mid-band. So it's going to be very interesting to see if that holds. And then here's Goldman Sachs. This is obviously one of the banks that had a tremendous run after the earnings. And I guess the question for us is, can we predict this? Well, I thought this was kind of interesting because GS had actually crossed into an uptrend here on the daily. Here's the crossover into an uptrend on a 60-minute chart. This happened back on the 20th of October. Really, right here on the 4th, and I can say on the 2nd, it got oversold on the 60. But look at the run that this thing made pre-election. I mean, this is really one day before the election. It just took off. Went from 175 to over 211. Incredible. Okay, let me just escape at it. All right. Are there any questions at all on any of the handout material? Now we're going to look at some we'll look at some live charts of some of these deals we talked about. I'll leave the PowerPoint up and accessible so we can actually I can grab it if there are any questions. But if you have any questions, shoot them through. So let's take a look. The first one I want to look at is CMG. I want to see if CMG was able to hold that mid-band. Okay, now look at it. It's actually took it out and is now sitting just above that mid-band. And, you know, right now, this is kind of an interesting setup. If the options were not so expensive on CMG, to me, a straddle would be a really good trade here. But they're very, very expensive. And then let's take a look at Goldman. All right, so Goldman did pull back from the upper band, and now it's kind of moving up slightly. This is going to be kind of an interesting setup because if it stalls here at the upper band, I would expect a decent pullback here. Let's look at the SPY. Okay, so voila, look where we are. Just 4 cents above the 27.50 level. We actually took it out by about $0.50 today. And here's the interesting thing that I was looking for on the SPX. We finally crossed up here. And that's, you know, now that we've crossed up, okay, I'm going to tell you, I fully expect us to take out. When I say take out, I mean, it's obviously it's taken out, but it's taken out slightly. I'd like to see a little bit better violation of the 2187.5 level. But, you know, I do believe we ultimately go to 2250. I think that's ultimately where this market goes. Okay, let me see. Now, and of course, by the way, with the S&P heading up, look where we are on the VIX. The VIX has actually continued to head down, and I think there's a minor resistance line right at 1328. But we're almost back to the 1250 level. So that's where I would expect a little bit of a bounce. Then if we look at the XLE, now look, the XLE, take a look here at something. We'll look at the TLT in a minute. Where's the XLE? Okay. The line is 72.66. All right, so it fell within, what, 26 cents of that 72.66 line. And then if we look at TLT, all right, we're back to 2184. Key level is 2188, 121.88. So, all right, so right now we're back to a close underneath it if it closes at this level today. So as I said, this is a really key level right now on the TLT. So this is going to tell us a lot about where the rates are going to go based upon where she closes for the next 2 days. So look at the jump here in the 10-year rate. Okay, it bottomed at 1.37, and it's up over 2%. So, I mean, the general consensus is the Fed obviously will raise rates next month. Yeah, it looks like everybody is counting on that. But you know what's kind of interesting to me is, I mean, the 10-year rate has moved 60, 80-something basis points, right, since it bottomed in July. And quite frankly, I think if the Fed raises rates, they're only going to raise them 1/4 of a point anyway. You know, I think the real question for the Fed is, you know, are they going to continue with a series of rate hikes? That seems to be the million-dollar question, and that seems to be what everybody's waiting on. I'm not so certain that 1/4 of a point really does much to derail this market. I could be wrong, but you know, I can't imagine, unless she comes out very you know, bullish on continuing a series of rate hikes. But I just can't imagine this economy is capable of that. You know, what do they think? Trump is going to put everybody back to work in 90 days? It's not going to happen. We all know that. Okay, let me take a look here. Yeah, Trump is... You know, and it's funny, now everybody's saying, well, you know, the general consensus, Trump is good for business, okay? But, you know, it's funny, that's not what people were saying before the election. You know, everybody was expecting the market to take a 10 to 15% hit. And, of course, that never happened. You know, and here we are up to new highs again. And, look, we're inching up above that 2187.75, 50 level. So now we're back up above it by 1/4. There were a couple of earnings today that had a couple of moves. Yeah, Hain popped. Yeah, and quite frankly, if I knew that, I wouldn't have suggested we sell calls on this Corrections Corp. I mean, look at the pop that this thing had off of the election. You know, certainly there'll be a sign tomorrow, which is fine. LB reported. I didn't look at LB. Yeah, it's funny. Okay, LB, not a huge move. Yeah, it was kind of funny, by the way. I saw an article on Yahoo where a lot of these private prison management stocks jumped, you know, under the presumption that you know, Trump would start locking up all these illegal immigrants. You know, it's just bizarre how the market works, isn't it? And Cisco reported. I don't know if they did anything. Let's take a look. Wow, they gapped down. And down 5%. Now, this is kind of an interesting setup here. Let's see if it got underneath the lower band. No, didn't even make the lower band. See, to me, this is kind of an interesting setup. You know, maybe selling a put spread underneath the lower band makes sense. Problem with Cisco is the premiums aren't all that wonderful. The other one that reported was SJM. Right, they're down $4. Not a big move. And Children's Place. All right, so they had a nice run up there. They're up over 11%. Interesting. Boy, that made some run into the earnings. Look at that. Trading around probably 72, 73. They were up $25, you know, since the last bottom. That's a tremendous run. Tremendous. Okay. Anybody want to look at any stocks while I'm, you know, look at anything live while I'm while we're on the webinar? That's what I wanted to go through, a couple of these earnings. Zebra, by the way, had a really big pop the other day. See here. Okay, now this is interesting on Zebra. Okay, we had the one-day pullback. Now we're reversing. All right, so we should, let's see, I assume it probably broke the upper band. Okay, it did. So this could be an interesting long setup on Zebra. I mean, I would wait for another couple days to see if it pulls back. Oh, yeah, good idea. You know what? I pulled this up. This is the weekly tracking, okay? And I thought it was kind of interesting because if we look at this, the one that kind of stuck out in my mind was Disney. You know, Disney reported, and you look at that, it gapped up above the upper band. And the support line was somewhere between 95.22 and 96 area. And it came to 97.42, and it jumped about $2 off that. The 20% level was 97.07. So, you know, it kind of held up. Never really got oversold, by the way. But nonetheless, it was still a little bit of a move. Vertex, I don't know what they did. I didn't really take a look at it, so let's take a look at it now. Okay, Vertex, same thing, was above the upper band, dropped to 90. Support level, 88 to 91. So it's kind of in there. Not much of a move, though. RTN had a really strong, that's another one that had a really strong price move last week off the not the earnings, off the election. So it's down to a low of 144. Okay. The midpoint's 143.34. So this is kind of, you know, kind of getting down to the area where it might make a push up. Let me bold that. I could take a look at that. Price line just had that really incredible move. Actually, I had a really incredible two-day move. The move before earnings and then the move after earnings. But it came down to a low of 1482. All right. Below the midpoint. But what's kind of interesting about this is, okay, above the upper band, came back to the mid-band. Mid-band seems to be holding, or seems to have held the support. And, you know, if you went in here, you can see obviously oversold. And if you use the mid-band as a stop, it's up, what, about 30, I'd say 30, about $45 since then. Again, very expensive options. So even the weekly options are very expensive. But nonetheless, the setup worked here. Let me see if any of the bearish ones. We had Trip. Okay, now Trip, midpoint's about 58. Oh boy. So that's, can that be right? Oh, I guess it is. 65 was the high. 20% level is about 53, 54. So it would be somewhere in this area where you'd be looking for a short. It's still a little bit below it. But what's nice about it now is it's overbought. If this thing punches up, that's probably a good little trade. And let's take a look at GLD. Or let's look at the stock, gold. Okay, so gold went to 75.89. All right. 76.92 is the 20% level. So pretty close, you know. Should probably continue down from here. And then let's look at the GLD. Highest it peaked out here is 117.27. 20% level is 117.85. So, you know, not making much of a sell-off here, but my feeling is it probably will accelerate to the downside, you know, once it breaks through this resistance level. The heck? There we go. Okay, MLM. Let's take a look at MLM real quick here. 20% level is 227. Hit 217. All right. So we're looking somewhere in between 215 to 220 as a support area. And it, quite frankly, it's kind of right there. Now remember, if you're trading off these weekly price bars, okay, and it sets up late in the week, I mean, you really can't expect that, you know, these other targets can get hit. I mean, probably the best you can expect is, you know, a run back to the prior week high. Or even if it ran back to this high here, or this pivot high, that's still a $12 move. You see something here. Yeah, I don't know if any of you have been trading any of these, but, you know, to me, you know, sometimes you can see these things set up in a really nice pattern. Boy, this is really, it's almost like trading against the bands because, you know, it's like you're using the band as a succinct level of entry. Let's take a look here. This is what I want to see. Okay, so they, well, okay, I don't know if they, I assume they have weeklies, but this week is the monthly anyway, so 217.84. Just want to price this out. So the closest would be 220. All right, so the 220, that is not a lot of volume here. 30-cent big AF spread. So you'd probably have, if you could look at a buy this, you'd probably have to pay about $1.30 for an option that's $1.30 out of the money. Seems a little expensive with 1 day to go. Yeah, I don't particularly like that. But let's look at something else. The 200 EMA is about 200. So, oh man, is that right? Oh, we're 18 bucks away. That's why. Okay. It's kind of far. I was going to say, what would be kind of interesting about this is, and this is only 23 and 10. This is only a 13-cent spread. I wouldn't, you know, if you were to sell this and buy the 200, you'd be collecting, say, a net of 13 cents, 13 bucks on $10. 1.3% for 1 day, and, you know, you're banking on the fact that it's going to stay above 210, which is the 200 EMA, which probably you would bounce there anyway. So I don't know. You know, if you could get a better credit or a little bit bigger credit here on the 210 versus 200 put spread, to me it would be probably an interesting trade. But I probably wouldn't do that myself. It's too bad because this stock tends to move pretty good. Surprised the options are so bad. Let's see here. Yeah, that's the problem. You're right. You're risking 1,000 per spread to make 13 bucks. You know, to me, not a great setup. Quite frankly, if you could make 50 bucks or 5% overnight, now it becomes a little sexier. And did we look at GS? Because GS, talking about 192 to roughly 196. The lowest it got this week was 205. Yeah. Which is right at the high. Interesting. So it's kind of hovering right at the high of last week. Never really pulled back even more. Just an amazing run, by the way, that Goldman made here. Okay. I'm just checking to see if there's anybody want to look at anything else while we're here? But I hope this has been helpful. That's why what I'm going to try to do is, over the next couple of webinars, kind of look at some of these higher risk setups. I got to tell you, I really like these Bollinger Bands. They really present some really nice low-risk setups, or I should say setups that are should warrant a trade. You know, that's really all we can ask for when we trade. All right. So anyway, next week we're off. Next Thursday's Thanksgiving. Excuse me. So I want to wish everybody a really happy Thanksgiving. Hope you eat well. I agree with you. Andrew says it would be a good trade, GS, if it pulled back to the mid-band. It'd be nice if it did. But I don't even know if it can do that. Maybe it can on the 30. That would be a nice setup. But you know, what's really nice is, you can see here, what was it on the 30? Look at that. It came right back to the mid-band and held as support. And that is really a nice trade. Now, if you saw this, you know, that's where you could have initiated, because if we look at Priceline has higher much higher options. That's why I say, you know, if you can track these things, that's where you can find them. But the mid-band here is about 1490. So let's go to 1485. I don't really, I got to tell you, I really disdain this new setup here. Okay, now look at this. All right, so the 14th. Okay, so Monday's the 14th. So if you look at this, I'm sorry. I apologize. I don't want to look at the money one. I wanted to go slightly out of the money here. This pivot low was roughly 1482. So let's say we go to 1470. Okay. So the 14, right? We were looking at the 1470. Okay. On Monday, they were over 10 bucks. So let's just round it. Let's call it 10 bucks. Today, let's call it 30 cents even. Now, if we look at the 1465, I don't see that. I don't know why this does that. If you hit backspace, it brings me back to MLM, which is kind of weird. Okay. All right. Now, let's take a look here. All right. So, the 1465 okay. Let's say they were, I don't know. This is kind of weird. It kind of spiked up here, but I don't know. I can't even get it. Okay. Let's say you got $9 for them, okay? That's $1 spread on a $5 wide, I'm sorry, $1 a net on a $5 wide spread. So say you sold the 1470 for 10, bought the 1490, I'm sorry, 1465 for 9, you picked up $1, which is a 20% return for basically a week. Not a week, 5 days. And quite frankly, even by yesterday, these things were devalued. Today, they're worth like nothing. So, you just keep it in place until tomorrow to see what happens. But, your risk is really a violation of the mid-band. And it's kind of interesting because, look, it came back to the mid-band here on Tuesday, and then it kind of held this support. But that's an interesting trade structure had you seen this. Now, again, fairly high probability, and I say that why? Because, number one, it's sitting on the mid-band. Number two, this to me is the major pattern. Okay, it took out the upper band, so we would expect another retest. We would expect this thing to odds favor this thing heading back up. But that's a way to trade that. So let's go back to the summary. See, I can't, this is, what I want to see now is what would have been what would the at the money call have done. So if we look here, this pivot low is about 1482. So let's look at the 1485 call. Okay, so look at these. It shows you how expensive it is. They were probably around $20, $21. All right, now they're like 41 to 45. No volume here to speak of, really. But they doubled, but they're very expensive. That's why it'd be very tough to do. Yeah, that's a good point. Andrew says the mid-band appears to be a gap fill. That's true. The high of the gap is 1574. I'm sorry, the high is 1485.50. So it's like right there. So that's another very compelling reason, by the way. Good. That's a really good thing to point out. Thanks for mentioning that, Andrew. Because it really came back, filled the gap, held support at the mid-band. We've got a violation of the upper band. Expectation is this thing should head higher. It's too bad it wasn't a little cheaper. You know, the options were in $2,200 on the call side. All right. Any other questions? Anybody want to look at anything? If not, then we're going to probably close down, and I wish everybody a very happy Thanksgiving. A lot of stuff going on today, by the way. I've got the CNBC on. We had testimony from Janet Yellen. We had President Obama speaking in Germany. And, you know, I guess the whole world is waiting to see what Donald Trump's going to do. Certainly looks like he's pushed aside the venerable governor from the state of New Jersey. Certainly dissociating himself from Governor Christie. Okay, good. I don't see any questions. Yeah, what a story. You know, it's crazy. You know, this whole Bridgegate scandal came out, and everybody keeps asking, you know, well, why isn't Christie indicted in this? But I think what's happened is by association, whether he did know or he didn't, you know, he's certainly being found guilty in the press. So, you know, yeah, at least, yeah, right. At least, you know, President-elect Trump has recognized that this guy could be a liability. So, hey, look, I don't see Trump, you know, having a lot of patience with people, you know. He's got his agenda, and you know, I think he's going to kind of just march forward. Was Celgene on our list? Oh, it was. 20% level was 122. We hit a low here of 118.75. Kind of just flatlined. Not a lot of movement here. Now, anyway, all right. I'm going to close down for today. I appreciate everybody being here. And again, I want to wish everybody happy Thanksgiving next week. And we'll see you in 2 weeks. Thank you very much.